This week in life insurance, we are still coming to you from Mexico City, and this week we're talking about a topic that we've talked about in the past before, and it's becoming a bigger and a bigger issue in the industry, and that is offshore reinsurance. Saw a couple other deals get announced this week, including a pretty big one where a carrier was ceding a portion of its policies to an offshore reinsurance carrier. And for us, it's a case of a little bit of offshore reinsurance is a good thing. It signals kind of strength in your business. But a lot of reinsurance kind of starts becoming problematic. And at some point, it just seems like carriers are starting to see blocks of their business to make them profitable because they otherwise wouldn't be. And you start seeing how Moody's at the end of last year announced that offshore reinsurance is going to be a credit negative for carriers. And we see some kind of other foreign jurisdictions, their regulatory bodies saying, hey, this seems a little bit kind of shaky for us, and we're a little concerned about the amount of business that's being put into these offshore reinsurance deals. And it starts feeling a little kind of pre-2007 mortgage-backed securities. Are we kind of focusing on short-term gains and short-term profitability and quarterly reports versus the long-term sustainability of these businesses and these policies? And at what point do advisors and clients start need to looking at how much of an insurer's business is seated offshore to determine how healthy that carrier is and how healthy their policy is? That's all for this week. We'll talk to you soon.